Welcome to the meeting of TFN's Audit and Governance Committee, an in-person meeting for a change. It seems like a long time since we had an in-person meeting, because it is, but it's nice to see everybody, so thank you for attendance. Just in terms of who we have, in terms of members, there's myself, Graham Bell, independent member and chair of the committee. We have Kevin Brady, who's also an independent member. We have Councillor Joanna Baker-Rogers, and we have Councillor Hans Mundry. And I will ask Councillor Tom Ross just to say a brief introduction, given that it's his first meeting. Tom.
Thank you very much, Chair, and good morning, everyone. It's lovely to join this committee. For those that don't know me, I am the leader of Trafford Council. Started that role in January of this year, so still relatively new, but probably not the newest of leaders across the country. Been a councillor for over 15 years now in Stretford, and I have to say it's good to be back in an audit and governance forum, because one of the committees that I was a member of for many years on Trafford Council was Accounts and Audit Committee. So when I did read the papers when they arrived, there was something very familiar about them and welcoming, and I look forward to contributing to the committee as we look ahead. So thank you, everyone.
All those audit things just came flooding back. I quite like that. Can we just, rather than just do formal introductions, I don't know, Gary, if you can make sure that you've got a note of attendance, but can we just have a quick whip around the left-hand side of the table, starting with Paul, just so that we can confirm who we've got. Sorry, Paul.
It's probably just worthwhile mentioning it, to operate these things, just push up any of the two buttons to speak, and then when you finish, just push it to come off. Paul Kelly, the Finance Director of TFN.
Good morning, everybody. Julie Openshaw, the Legal and Monitoring Officer for TFN.
Good morning, Gary Rich, Democratic Services Officer for TFN.
Good morning, Joanne Barclay, Senior Solicitor for TFN.
Good morning, Daniela Della Smith, Risk Manager for TFN.
Good morning, I'm Alex Hime from RSM, and I provide the Internal Audit Service.
And I'm David Worsley, Rail Strategy Manager for TFN.
I'm Daniel Watson, the Director with Mazars, the External Auditor.
Bless you. Thank you all. Right, so just skipping down through the agenda, the next item, if everybody's happy to continue, is declarations of interest. So specifically for members, if there's anything on the agenda or anything else in relation to the role, if there's anything to declare, then please do that. Please do that now. Okay, so the next item is the minutes of the meeting consultation call that was held on the 9th of August of this year. I know one or two of us have already stepped through the minutes. I don't think we had any questions prior to the meeting on the minutes, but I'll just step through them. Please shout or interrupt in some way, shape or form so that we can capture any concerns. So the record of the meeting before that was the 17th of February. The meeting on the 9th of August included an update on corporate risk and quite a significant and lengthy narrative regarding risk. We then moved on to, if everybody's happy, we then moved on to the draft statutory accounts and the annual governance statement draft that was included therein. We then covered an internal audit update and an external audit update following that. And then the meeting concluded with a summary of the quarterly operating report through to March, as it was at that particular moment. So if everybody's happy with the minutes, we will move on to the next item, which, as has become the norm, Daniela, is risk. Now, I know that, and thank you to members who have contributed questions prior to the meeting. I know that, Daniela, you've had sight of a couple of questions already. So I'll leave it up to you, obviously, as to whether you field those as you run through, or whether you want to leave them to the end, or obviously we'll still have time for questions and challenge. So over to you.
Morning, everyone, and thanks for the feedback. It's much appreciated, and I will sort of go through and address those as we're going through. If I forget anything, please do let me know at the end. So the first update I want to give you today is updates to the corporate risk register since we last met, and then David Worsley has kindly joined us to present in terms of the deep dive and reduced role in rail industry. So in terms of when we met in August, in terms of our current risk environment, it's not changed much. However, there's probably two things that are worth noting. In terms of the relocation of the TFN's head office space, we're due to move into that space on Monday, so everything's on track for that, which is good news. The second thing that I wanted to address as well within the risk environment section is 1.1.4, which is around TFN continuing to monitor the political environment based on the upcoming general election. I know that this is something that Kevin mentioned in the feedback, and how we're incorporating this within risk management. And we're doing that in a number of ways. So we are closely monitoring this corporate risk 879, which relates to material change in government's commitments to STBs. And the main causes of that risk is change in secretary, change in government, or a change in policy. And that risk is being closely monitored at the moment in terms of its impact to TFN. But as well as that, we're looking at risks across all functional areas within the business and raising the political environment to see how it will have an impact in the future, and risks are being assessed or reassessed if it's required to do so. And there's also an agenda item for September with the monthly risk champions meetings around the political environment and the general election. So some of the key changes that have been made to the corporate risk register this time round, based on the Audit and Governance Committee meeting we had in August, we've updated the wording of the decarbonisation risk slightly to include TFN's current decarbonisation trajectory assumes a reduction of between 1 and 2% of 2018 surface transport levels. We've also updated risk 643 for recruitment of retention of staff with 2 additional controls. That's based on the deep dive that took place. It's important to note that those controls were already in place. Now they're documented within the corporate risk register. There was also a number of, taking the report as read, there was a number of other changes to certain mitigation actions and closures and updates. I know Joanna asked a question as well around an update to the key milestones, and hopefully you'll find that within the quarterly operating report. So there was some specific questions which I think is quite important that we have a discussion around now in terms of some of the feedback given from both Kevin and Joanna, which was, so there's a risk around, Kevin raised a point around the Mazars EA reports flags a significant risk around reduced grant for 23-24, and how is that captured? So currently we're capturing that within risk 916, which is material variations from funding planning assumptions. That's all captured within the financial sustainability risk. Joanna also asked a question around this risk, which was our target score. So Joanna's question was, is there a reason why there's not a reduction within the target score in this assessment? So Paul and I have had a discussion on this, and what we're proposing is that we will implement a new action on this, and the action will be something along the lines that, subject to a funding allocation, an appropriate action plan will be put in place. This will hopefully see a reduction within that risk. However, that particular action will have a long-term due date, so it probably won't go into play until March 26, when we've received the sort of funding allocation because we've already got 2 for the next 2 financial years. On a broader point, Joanna also raised the question around some of the risks have the same current and target assessment. Is there a reason for this? And there's a few factors that fall into this. Some of them are around. One of the main factors is are we, TFN as an organisation, comfortable with reducing that from what it is at its current state? And the reasons for that is it ultimately in TFN's control? In terms of our environment and the existing controls that we've got in place, can we do anything over above that in terms of mitigation actions to implement? But also, just if it is the same current and target position, it's still effective in what it's doing, because what we're also doing is, through the existing controls that we are preventing that risk from getting worse, or also preventing, hopefully, we're also, in the future, we might be able to create a reduction in its current environment. I think...
Can I just ask an interruptive question on that? And it goes back to, I think, one of the first things that Paul said to me that I remember when joining the committee was in respect of risks that TFN has little or no control over. And I think it's a really good point. I just wonder whether is that explanation, does that jump out from the narrative in the risk register is my question, because it is relevant, it is pertinent. It does set the context within which you present an assessment. So if as you've described it, is that what I would get when I read the risk register? I guess that's the question.
I think there are specific risks where it's quite clear that TFN don't have control over them. They are the specific ones, such as reduced role in rail industry, certain risks that we can't control. But also we do have, within the control actions, we have high, medium and low. So, and that will also indicate whether we've got enough influence over it. If it's high, and if it's low, we haven't got as much influence.
Thank you for that presentation. I just feel a little uncomfortable that, say, if we look at this number 916, you've given it a rating of 19, which is very high, and there's no ambition to actually try and influence that risk to actually reduce it. And I just don't know if I feel comfortable with the degree of challenge there is and the drive to actually reduce these risks, because I don't think anything that's very high should have a target which isn't to improve.
Yeah, hopefully as well, Joanna, the additional action that we put in place there that Paul and I discussed yesterday around the appropriate action plan at the time when we get the funding allocation, will see a reduction in that risk. So next time we come to Audit and Governance Committee with the updated corporate risk register, you should see a reduction within that risk.
So then, does the target need to come down?
Yes. Yes.
And I also think that across the board, when I look at this, there's a lot where the target is the status quo.
Yeah.
And I don't think any organisation, if they've got risks that are not in their green category, yes, or in the, or at least in the one above that, should be satisfied that that's an acceptable place to be.
I don't think it is satisfied that it's acceptable, but it is based on those number of factors that were discussed before around what's in TFN's control, what's existing in place within their control environment, and can we do anything else further than that to mitigate it. But they are very closely monitored. They're very high and high risks. They're looked at monthly to ensure that they're not just sat there and forgotten about.
Hans, go ahead.
Yeah, I've sort of have a slightly different opinion, because I'm looking at the risk of thing. I think if it's not in our control and we've got no measures to affect the actual risk, is how can we sort of not have an high risk? That's it. So like the funding isn't in our control and we can't influence that. The staffing levels again is limited to the funding we get, and also with increased wages, increased costs of everything. The projects that we want to deliver, again, the risk of having the funds to do that is again out of our control. It's against the costing systems. So I recognise it's a high risk, but is that the true picture? And I think we have to reflect the true picture, whatever that picture is. And there's too many factors out of our control, so that means we have to have an high risk rating for that. Unless we've got some measures we can reduce that risk, we have to keep it as a high risk and identify it. And like you said, it's got to jump out at you. That's something that we need to start implementing on and start trying to get some control of it and do some lobbying where we need to say, this is a high risk, we can't remove this high risk unless we get some leeway from somewhere. And at present, all the levers are out of our reach.
I think with that particular risk as well, as an example, it's important to note that what makes it very high is the impact to us. So the impacts in terms of the sort of financial impact, really more than anything else, is driving that sort of that red.
916 is a really good example, actually, of what's in our control and what's out with our control. So funding isn't. So if the department decides to reduce funding by 40%, which it's done at a point in time, we have to deal with it. What is in our control is the cost base. So this is what Daniel and I were talking about yesterday, is that by including a long-term action that says if the funding is reduced, which is out with our control, then we will have to take an action which is to do something on a cost perspective. But we don't need to do that until that decision is made in maybe 18 months' time that would be advised. So what we're endeavouring to do in the next 18 months is to nudge and encourage and support the department in terms of objectives and embed ourselves as part of the sort of delivery vehicle. So therefore the funding assumption continues or increases ideally, and then we're in a position where our cost base is covered and we have longer term sustainability. So I think there is space for an inclusion of another action, and it would be something that would be implemented if the funding were to be materially reduced.
I think
and then that would reduce the target score.
Yeah, the second point to be sort of my question is even with the same funding level, what you can purchase with that funding is reducing as well. So the cost of everything, so staff wages will go up, which we've got to keep in line with that. But what you get, it stays the same. But what you get, you can't buy the sort of same goods with, or even get the same services with. So we can have some influence on that. Obviously, shopping around, trying to do the best you can. But the two factors, sort of a double whammy, isn't it? You've got no say on what funding you get in. Also, you've got no say on the rising cost of actually delivering your service you want to deliver, paying staff, buying equipment, delivering programs. That's increasing, and again, we've got no control of it, or we've got limited control, let's say, over that. It's just an observation of that to say, but we've got to keep that in mind. And if something's a very high risk, it's there for a reason, and I think it would be remiss of us if we sort of reduce that risk prematurely, really, or without having any facts to back it up.
Just going back in terms of the risks, in terms of cost escalation. Our planning assumptions do contain assessments of what we think are reasonable escalations, but they're assumptions. You know, if inflation runs at 12% or 10%, you know, we wouldn't be assuming those kind of levels, because that would, if you assume 10, 15% inflation levels, the reaction you need to take is you need to reduce your headcount. So it's a balance between a reasonable level of provision and assumption of what could happen. But if it pans out, if inflation does run high and costs our discretionary costs are relatively low, so the main exposure will be to wage inflation, which again we've got a fairly modest provision, well, a reasonable provision in for that as well. But that's subject to a government, a sort of a local authority pay negotiation. So we don't negotiate it ourselves; we get what's agreed.
Yeah, just coming back to the Mazar's report, I just think from a good governance perspective, the committee needs to record somewhere, doesn't it, that we've acknowledged that there's a significant risk flag there, but that we're mitigating that through the management of the risk register and etc. So I just don't want to be pedantic about it, but in terms of being able to track that, because that will ultimately be a public document, won't it? So we just need to, have that boxed off, it seems to me.
And then the other point about the sort of political environment and horizon scanning, I still feel that there's whilst I recognise that ID 879 does capture it at a sort of strategic level, we've got some very specifics in front of us, haven't we? We know that there's a general election next year. We know that we don't know that there will be a change of government, but there is a high probability of a change of government at the moment if the polls are to be believed. So it just seems to me that we need something that's a bit more specific about, well, do we know what opposition parties are saying about, for example, GPR? I don't know. I don't know what the answer to that is. But if let's just hypothesise that, that the Labour Party is saying on day one we're scrapping that, we're pulling away from that policy, well, that has a significant impact and influence. So it's wearing other hats elsewhere that in terms of that horizon scanning, we are trying to capture that and look at what are some of the hypothetical situations that we may find ourselves in next year and how does that impact on the business. So just being prepared in terms of some of that forward planning and forward mitigation.
I mean, just being on that one, I mean, the Shadow Secretary of State and the Secretary of State were at the conference in February in Newcastle, and the Shadow Secretary stated their full support for NPR full, which is certainly more than the Secretary of State aid. So hugely encouraging if that eventuality were to pan out. There's clearly a bigger picture though, because it's all about the 96 billion through the IRP and how that gets cut. And obviously we've all heard the recent releases in the Independent yesterday around HS2. So it's a very big equation. And but I mean our role is to advise the Secretary of State. That's our duty, whoever that might be. We've got to tread a careful line, but I do acknowledge the fact that we should be aware of the political environment. Yeah.
Yeah, I just think that perhaps we need a narrative before the risks are presented that explains why so many we aren't expecting to be able to influence or control them to actually reduce that risk rating, because that gives the context for it, doesn't it? Now, on a different point, I asked a question about why is net zero not an appropriate target? Obviously, the council that I'm a member for does have a net zero target, and that's for 2030. So I'm just a bit perplexed about why, you don't think you can reach net zero.
I'm not sure, Joanna, as well, if you saw the response sent through from. You didn't. Did you not? Did you not get that? No. Okay, so there is a response from the head of decarbonisation on that in terms of the long term. I'll read the response so everyone can. So I can summarise it.
So Peter's. It's an interesting one, this, because should every attendee of every meeting know everything? And the answer is clearly not. We're very comfortable from a financial and a risk perspective. I think where there's challenges is specific functional risks like decarbonisation. What we felt it would be better to do is to get the expert to liaise and interface with yourself. So he's given a response which kind of makes sense, which is along the lines of, local authorities have got lots of capacity for other things that they would influence to fold into the decarbonisation agenda, whereas TfN from a transport perspective is relatively narrow. So that's the approach that Peter's saying, is that nearly net zero is an ambitious target in relation to a transport authority, effectively a transport SDB. And that's captured in the correspondence. I think if it's okay, perhaps if you could look at that response and go, yes, it makes sense, or if it doesn't make sense, then please feed back. And but it's one of these ones is I wouldn't want to get involved in Chinese whispers, because Peter's really, really good and really sharp, and I think it's a very healthy debate to have. But if that could be had offline, that would be very useful if possible.
Would I just ask for it to be resent because I couldn't find it on the email. So thank you very much.
Can I just mention timing? I'm just conscious that we have a very interesting deep dive still to address. I don't want to cut you short, Daniela, in terms of.
Don't worry, Graham. That was everything I have.
But
So
I think there is a general theme there around perhaps some of the context within which those assessments sit and why the assessments look like they do and what they mean for TFN, which might be different to other organisations. I think I'm less excited by the number of a particular assessment. I'm more interested in whether you feel well informed as an organisation about the risk. And I think that's where the narrative might help to inform us as external, independent, semi-independent folk, I suppose. Great. So
I think
yes,
that's,
should we move on?
Yeah,
to
I think that's it in
rest?
terms of, and hopefully I've fed back on most of the points raised on the emails. I think, Graham, you have quite a few points that you raised as part of the deep dive, so we'll go through that now. So in terms of the deep dive for today, we are looking at corporate risk 310, and it's around TFN could have a reduced role in rail industry. David Worsley has kindly agreed to attend to take some questions on this and to give a bit of further clarity as well where required. Graham, I'm wondering if it's worth, should we start with some of your, no?
Yeah, no, I launched at you. Sorry, I didn't want to influence the discussion. That was just in case we needed a bit of a frame. So, David, go ahead.
Okay, so I'm going to briefly talk you through this risk because you've got the slides already. But the description then is there's a risk TFN could have a reduced role in the railway industry in future after GB Railways becomes operational. The ultimate cause of this arose from the uncertainty in the white paper, the William Shapps plan, where transport for the north wasn't mentioned at all, which we were a bit disappointed about because we're the only statutory subnational transport body, obviously, so we were hoping for at least a mention. So that created a great deal of uncertainty for us about what our role would be in the future. I think in terms of root cause, I would also add that there's increased focus on mayoral combined authorities, I think, in lots of the discussion of transport, so that is an added area of uncertainty for us. So in terms of the actual impacts they're worried about, well, at the moment, clearly Rail North Partnership has a role in specifying services, the role that Great British Railways is intended to have in passenger service contracts, therefore potentially could undermine that. And I suppose the other thing we're worried about is our role in strategic planning. At the moment, the technical assurance modelling and economics teams involved very heavily in building the business case for Northern Powerhouse Rail and using all the sort of advanced analysis they've got to support that. If GB Railways gets more involved in the strategic planning role in future, that could also take some of Transport for the North's role and function away from us. So in terms of mitigating this risk, well, we've got ongoing meetings with the Great British Railways transition team. Things haven't progressed as rapidly as we were hoping on that because clearly now it doesn't look like there's going to be any primary legislation in this Parliament, which is what we were originally expecting. So GBR transition team aren't coming up with proposals as rapidly as we thought. Second point there, we've actually recruited a full-time member of staff, a rail reform advisor, who is working on nothing apart from rail reform to help mitigate this. And by the end of this calendar year, the intention is he'll come up with some very firm proposals for what we'd like Transport for the best role in the rail industry to be in future. So that's mitigation 2. Part of what the Rail Reform Advice is looking at is the concept of a North West Rail Business Unit, so partly inspired by what already exists in the North East, NERMU, the North East Rail Management Unit, but it will be quite different from that. So one of the things we will be able to do is compare and contrast what the North West want with what the North East already has, and that will be part of the proposal we come up with by the end of the year. And then finally, regardless of what happens with all that, we still have ongoing liaison with Great British Railways transition team. So in terms of the rating of this risk, in terms of probability of happening, that's been reduced to medium now. It was high initially because there was such a large amount of uncertainty, but we think the mitigation actions we've taken into place reduce it to medium now. But in terms of the potential impacts, it's still very high. Clearly, one of the things Transport for the North wants to do is encourage modal shift from private road vehicles to public transport. So if we have a reduced role in the rail industry, that really would undermine one of our core objectives. So that's why we've rated it as external relationship and reputation, very high impact. So going into the sort of the deeper dive then, there's the points that have been made in the subsequent slides. Really, I think the first slide is actually emphasising that the potential creation of Great British Railways is actually an enormous opportunity. I know we're looking at the risk, the downside here, but it does, because of the uncertainty and the fact there were things that were left unsaid, it is an opportunity for both Transport for the North and mayoral combined authorities to develop a new relationship with Great British Railways as a successor to Network Rail, and maybe have more impact. And you can see the third point there is pointing out how transport planning works at multiple levels, really. And even if the mayoral combined authorities are successful with things such as the Trailblazer arrangements in getting more control over rail services which just exist within the boundaries of the mayoral combined authority, there's still actually quite a lot of rail services cross boundaries, particularly between Greater Manchester and Yorkshire or Merseyside in the other direction. And Transport for the North would like to have a role in the higher level sort of pan-regional service specification, as we've mentioned here. So that slide's really emphasising the extent to which it's an opportunity. The next slide, then, the one that starts with rail reform, must reflect how our railways are now being used. I think the point to mention here, particularly, is if we want to influence Great British Railways, that will be affected by how Great British Railways is organised. And if it follows the Network Rail regional structure, that does make life slightly difficult for us because we have to deal with two separate regions, two whole different strategic planning teams, because Network Rail is based around radial routes out of London. So we have to deal with Eastern Region, who services out of St Pancras and King's Cross, which is of interest to us, and North West and Central Region, which are services coming out of Euston, which are of interest to us. Now, TfN's current official position is that we'd like there to be a northern region in the future, which at the moment would be difficult to get because the timetable and planning is all based on these radial routes out of London. But actually, in theory, if Northern Powerhouse Rail is enacted in full, as we'd like to see, and the line from Liverpool up to Newcastle via Manchester, Leeds and York becomes much more heavily used, that would actually, there would be a logic for having a northern region then. And so that's the sort of thing that we can deal with through our position on rail reform. And as I say, with our official position being we'd like to see Northern Powerhouse Rail in full and a northern region, those two aspects reinforce each other there. And also, we also have to be flexible enough to deal with the changing rail market, as you'll have heard mentioned. Leisure demand has become a much more important part of the rail passenger demand at the moment. And that's been good for the North because actually we already had a higher proportion of leisure demand before COVID. And so in that sense we haven't been as hard hit. And that is another background factor supporting the idea of having a northern region in future. And then finally, the last slide shows you what the actual principles are that we're currently working on, and these are what the Rail Reform Advisor has been instructed to put into the proposal that he's coming up with. So we'd like to build on the existing devolved arrangements with Rail North Partnership to try and head off this risk that we'll have a reduced role in specifying services. We'd like to build on the concept of double devolution, so Transport for the North have got powers devolved down from DFT rather than from local government, and we'd like to further devolve them to local areas, so that's where mayoral combined authorities come in. Yes, the single region for the North I've already mentioned, with budgetary powers, keeping our statutory role in planning, and also being able to influence Great British Railways with our strategic transport plan, which should of course take more account of multimodal issues and contact between different modes of transport, because we have a remit to look at that, whereas Great British Railways will be obviously be focused on rail. So yeah, I think that's basically the background to this risk and where we're at the moment.
Super, David. Thank you. That was exactly what we needed. I think so. On the basis that there's probably no bigger risk that we can be discussing than this one, I'd just like to invite members to present any initial questions or thoughts for David.
Thank you, Chair. I'd just like to say that I think this is a very timely piece of work to have been done. And I think it's very important we keep this up to date, because things are going to change next year in some way. And I think the fact we understand better what those risks are is, a place where we need to be. So thank you very much for doing this piece of work now.
Thanks, John. Kevin, do you have anything?
I just wondered if you could say a little bit more about the relationship between the proposed sort of North West business unit and there's already a pre-existing North East with TFN, because I wasn't quite sure what the fit is there and how different responsibilities are sort of shared out.
Yes, I think I'm not sure how this works. Do I have to press this again? Right. Yes, the North East at the moment benefits from the fact that its local services are to some extent segregated from the mainline services, with the layout at Newcastle Station. Things such as the local services that run up from Middlesbrough or across from Carlisle to Newcastle don't interact as much with the East Coast mainline services heading up from York to Edinburgh. And so the North East councils have been able to have more of a role in specifying local services and influencing what Northern are doing because of this sort of helpful arrangement, which ultimately just comes from the track layout, really. It means that they're able to have more influence over what happens in that area, and there are regular meetings mainly with Northern and TransPennine, but also actually the other train operating companies attend the NERMU meetings, and it's now Transport for the North East are able to have more influence over what actually happens in that area. Now, the problem with North West Rail Business Unit is there isn't going to be that level of segregation. So that's why it's going to be more difficult to get the same level of influence, because the constraints that the West Coast Main Line puts on what's happening around Liverpool, Manchester, Lancashire and so on is going to be greater, and so it's going to be more difficult to get the same level of influence, and that's the problem that the Rail Reform Advisor is currently working on. But yeah, he's in contact with the local authorities in that area to discuss it.
Great. Hans, Do you have anything for Tom? Don't use the fact this is your first meeting as something to hide behind.
No, I mean, I was looking at the sample deep dive questions. I think the presentation you gave responded to them all. What I found very interesting as someone new to this area is that twin track between what I see as the kind of inertia at government level, as we've alluded to with the general election coming up shortly. It seems as if things have just stopped at a national level, but at a local or a combined authority level, there's very much a desire to get moving on things, particularly around the public transport and rail offer. So it's just very interesting from that perspective to see how Transport for the North is balancing those two different things at the moment. And yeah, I was very assured by this deep dive and the information that you put in it. So thank you very much.
Yes, actually, I did have a few questions were sent through before the meeting, some of which I've answered already, but it was asked which aspects of TfN's reshaped role does this refer to, being a single regional voice, champion of integrated transport, or as a centre of excellence for transport planning. And I mean, the answer is all of them are affected by this, which is another reason why it's been put as a high impact risk. So that's another one of the issues that was raised.
I mean, one of the other interesting aspects reading the text is that risk is all about the assumptions that you make, and it's how those assumptions are threatened that leads you down a particular decision route, I suppose. But I was interested to see the word devolution in the write-up of this particular risk, because from a lay perspective, almost the idea of introducing a national centrally funded body by definition is counter-devolutionary in terms of its DNA. So I was interested just to see how you thought anything within that reform could possibly support this drive, desire towards devolution of power.
Right. Actually, well, that's a really interesting point, because for a long time there was a lot of confusion maybe about what double devolution actually meant, and I think for a while I had the wrong end of the stick about that in the work I was doing, because as I say now, the official view of what is meant by double devolution is that first of all powers devolved from Westminster down to TfN, and then secondary down to more local bodies even than that. But there was also another interpretation, which is that political devolution from Westminster to local bodies would be one side of it, and the double aspect was also that there'd be decentralisation within Network Rail, and that GBR would actually be more decentralised and responsive to local issues than Network Rail currently is. And so some people, including me, thought that was the double, that it was both organisational devolution within Network Rail and political devolution at the same time, because that supported the idea that perhaps rail issues could be resolved at a local level without having to get Westminster or GBR HQ involved at all, and regional directors within GBR based in Leeds or Manchester or York or wherever would actually be able to locally negotiate with political representatives and come to decisions without going to London. So that is still a theoretical possibility, but with things going slowly on GBR and what that will actually look like, we don't know, but that's still a possibility that could arise at the end of this.
And the only final point that I was going to make or share, I guess, was that it goes back to something that Kevin raised in his pre-meeting question about emerging risk and about horizon scanning, is that we're really bad at predicting the future. However much it might be exciting to try and do it, we're really bad at it. But the one thing we do know is that there will be rail reform. It doesn't matter which government it is, it doesn't matter whether you're talking about 12 months or whether you're talking about 5 years, there will be rail reform, because the previous model hasn't been great, in many ways, certainly not from a passenger perspective. So another way of writing this risk would be, rather than focusing on GBR, would be focusing on TFN's ability and capacity to respond to change as it happens. And I think that's it's worth looking back at the assessment that you've made against that particular risk to think, well, what does that say about TFN's ability and capacity to respond? Because that's at the core of it. Because in 24 months' time, GBR might just be a rather unpleasant memory, and you'll be faced with something else. And it's
yes.
You know,
no, I mean this is something. Yeah, I do spend a lot of time thinking about is how far ahead can you actually reasonably plan? And I think if you just extrapolate existing trends, you can't really accurately predict more than about 10 years in the future. And part of our role in TFN is to think much further ahead than that, is to think 20 or 30 years ahead in the future. But I mean, thankfully, what we do have is the future travel scenarios work, which technical assurance modelling and economics have worked on, in which there are four potential futures based on demographic and residential and technological trends. And when we are thinking about the future and making plans, we do refer to all of them. And we think, well, does this proposal stand up in all of the four scenarios for the future that we've devised? And that is actually, I mean, it is as I'm sure Danielle knows, that is one recognised risk management technique, scenario analysis. Think about different potential futures, and I'm glad that at TFN we are doing that, and we actually won an award for that piece of work. So we're happy to use it in all the planning we do.
Grant, thank you, much appreciated. As I said, I can't think of anything better to talk about than that particular risk. Is that you, Danielle?
Yes, I think that's all I wanted to say.
Knock your mic off.
Yeah.
You done, Danielle?
Yes, I think that's it.
45 minutes on risk. That's not bad. Is that a record?
I don't know. I think last time we went
more than
nearly
that,
an hour.
okay.
Yeah.
Grant, splendid. Thank you for those contributions. So the next point on the agenda, Paul, I think, is business plan and quarterly operating report.
Yeah, I'm happy to take that. I couldn't recall whether we had previously shared the business plan in earlier years, but obviously I felt it was important that it was shared formally as well. So obviously we've attached the business plan to, as it was one of the papers, for the A&G committee to consider. And we've also then attached the quarterly operating report, which is quite significantly different to the way that it would previously have been compiled. I mean, it was probably a 30 or 40 page document, and it was probably a little bit confused of whether it was an internal or an external document. And I think so we've reflected back in terms of the operating report. Firstly, we've moved it to quarterly, which I think is a good move. And secondly, we've changed its focus somewhat, in that we know certainly there was a lot of risk in there, and I think we've revised the risk strategy to put more onus on the executive team to manage the functional risk within the business and report accordingly, and not necessarily put it in the quarterly operating report. The operating report has got a lot of focus on the milestones that are within the business plan, that generally seems to have gone down well. I think we acknowledge the fact that it's work in progress, and we're happy to consider changes to it and modifications, and we probably envisage that there will be modifications and changes going forward as we bed down as an organisation and get the right product that meets the needs of ourselves and also the needs of the key stakeholders. The intention is to take the quarterly operating report as a formal report to board now. Again, I think historically it would have been emailed round to members, and I think it's probably safe to say it probably didn't raise too many concerns or questions, possibly because of its volume. So the intention now would be that at the board meeting on the 27th of this month, it will be included as a paper and with a wrapper around from Martin to give a summary of matters arising, plus also referencing some of the outputs of the quarterly operating report. So that's the essence of the agenda item. Happy to take any questions, and I will endeavour to try and respond to, but if they're of a technical nature, I will flag early that I might well be challenged to respond, but we'll see.
Any questions on that from members? Joanna?
Just one. I just wanted to know, are we on track to achieve the key milestones? Yeah, okay, fine, thank you.
As you note, I mean, they're quite broad milestones. I mean, that's the nature of the organisation. It's a strategic consultancy. I think that very question is resonating around the organisation now. Is how do we put some structure behind the milestones to make sure that we've got confidence that they are being delivered, especially when you've got longer deliveries, let's say to March 24. It's how do we get, and the purpose of the information in the report was to give a degree of assurance that there is progress. But these items aren't weighted, so you don't know is there a chunky item that's due to come down that hasn't there yet. But that's the bit about work in progress that we need to consider.
Is everybody else comfortable with that, or a question? I think the point that Joanna raised, for me, is slightly different, but the same topic, I guess, is when we plan, we don't often take the opportunity of looking back to see how good we were this time 12 months ago, and whether the focus is on milestone delivery. It's not necessarily on how good we are at delivering our milestones, and the two things are kind of different. That might just be worth thinking about and reflecting on, I guess, in terms of how good are we at this stuff. Because reporting progress is one thing, but we're either getting better or worse or we're the same, aren't we, by definition, I suppose. Anyway, just amusing. Excellent, thank you, Paul. We can perhaps safely. Sorry, Hans, go ahead.
The question I'll try and say in the business planning is demonstrating, I think it's a bit like what the Chair has said, demonstrating our work, particularly going forward. We need to make sure how needy are we, or are we needed by government offices and departments. As part of our reports and our quarterly reports, to say how effective have we been, so therefore how they need us to continue doing the work we're doing. Probably said it very poorly, but saying, actually, can we demonstrate our worth past and going forward with plans for the people who depend on our services, and obviously reflecting our funding stream in the future.
Hans, you've nailed it. I mean, it's you could view it as a bit of a marketing tool, but and to a certain extent it is. It's about demonstration of activity and delivery, and the delivery gets confidence, and then hopefully then confidence is rewarded by an appropriate level of funding. So it is an interesting challenge, that, but it is about embedding the service. But it's the whole principle of the TFN offer that was introduced by the department. They gave incremental funding this year and next year in relation to that. And that was recognising the fact that what we do is good value, what we do is good work, and we're advising them on NPR time. But also, why have other organisations go through the same journey? Why not just, request the output from us? So again, it's recognising the fact that there's good output. It's interesting because the TFN offer. There was a discussion yesterday with the department around this. Is that one of the things that's emerging is other STVs going, well, how do we get our share? Which is quite an interesting one you never envisaged, but that's demonstrating success, because they all want something and all want a fair share. But every LTA and every STV, they're at different levels, so it's interesting as to how we accommodate the requests. Some will be very easy and some will be more challenging. But again, I think that's recognising success now, that the fact is that there's an acknowledgement that we're doing a good job, and there's a request to provide the services under the TFN offer. The key stage now is to get a good track record of delivery. Yeah, exactly.
Yeah, it's about outcomes, isn't it? It's about value and outcomes, not just about whether you delivered a strategic paper on time. It's has anybody read it? I was going to say you've got enough ex-auditors or current auditors around the table to know how sensitive that point can be, but I shan't mention that. Excellent, thank you. So that's probably a good segue actually into audit, of which there isn't an audit update for our internal activity.
Internal audit is a standing item, but just because of the sequence of the audits, there was nothing to report. But that's not to say that Alex couldn't join us, because obviously we've an equal seat around the table, and if Alex felt there was something that needed to raise, she could raise it. So it was just acknowledging the fact that internal audit is there as a standing item, but there's just nothing to report this particular time. That's what it was.
Regarding not having anything to actually report, I take it there haven't been any internal audits since this standing item was last brought to the committee. But I was just wondering about progress on any actions raised from previous internal audits. Where are we with that?
Thank you very much. So in terms of progress against actions, we do an annual follow-up review. So you've had that previous. What we do then is the next reiteration will capture all the actions that have been raised as part of this audit plan and follow them up, so you'll get a progress update from that perspective. But in terms of the reports for the next committee, predominantly I've got a meeting actually with Paul and Daniela after this, is due to the relocation happening, the timing of those reviews. So it will continue and we will deliver on track in terms of the current year. It's just some of the timing, just taking into consideration some of those elements. So.
I think just to add one thing as well, RSM have been really a very effective relationship that we've had actually since probably 2018, isn't it? Yeah, and but we felt it was appropriate that at this stage we went out to the market again. If the answer that comes back from the market is RSM are the best partner, then wonderful. But we felt from a value for money perspective it was important that we went out and tested the market again, because I think sometimes it's a bit easy just to continue, and I think just taking a step back and reflecting and asking, just make sure that we're getting the best that we can get, and so that tender is due back in, well, imminently actually, I think, isn't it?
Thursday next week.
Grant. So what is the next report that we expect to see? Is that the
We have 4 reviews to complete. One is in regards to IT. We've got value for money, 2 people element reviews. One is around mental health and performance management appraisals. So there's 3 that we will be discussing to take forward October, November time. One that's in January. So again, we will be having a meeting just to confirm those dates and to make sure it aligns with the committee cycle as well.
I think just generally on this, with the office move, actually, so we're now, I think we're 4 floors above here, directly above. What we wanted to do was get in, get settled, and make sure that we've got our systems and processes working well, as opposed to doing a review that says you need to get your systems and processes working well. So I think if we get in and embed our processes, and then Alex can come in and have a look at what we do and say, well, yes, there's some areas that you could improve, or alternatively, it's looking great. We thought that was the right way to do, and therefore, I think it's about sort of October, November is envisaged to try and get a couple of audits out between now and the end of the year, isn't it?
Great. So it was worthwhile you coming after all. Thanks, Alex. External audit. Daniel, please, thank you.
Thanks, Chair. So I'm pleased to present our audit completion report for the 22-23 audit. Apologies, I get mixed up with financial years. I'm working through quite a few different financial years at the moment, but 22-23 for TFN. If I start off with section 2 of our report, which is the status of the audit, this was obviously a snapshot at a point in time, and things have moved on quite significantly since then. So on page 7 of our report is what I call our to-do list. I'm pleased to say that most of those items are now cleared and there's no further issues arising from those. The one substantive point that does still remain is the assurances from the auditor of Greater Manchester Pension Fund, which unfortunately we're not expecting until probably October. We won't be able to sign off the audit until we get those assurances, but I just suppose to provide some assurance to committee members, this isn't something in TFN's control, it's not something in my control, it's something we have to wait for externally. But there is always a chance that if errors are found on the pension fund audit, TFN's share of the errors may need reflecting in the accounts, but we're not expecting any at this stage. So other than that, then it's just the standard closure procedures in terms of receiving signed financial accounts from the board. So while not quite where we'd like to be, it's a good place to be in terms of the overall progress of the audit. I won't touch on section 3 because that's fairly standard. Section 4 are the significant findings from the audit. So members will remember from our audit strategy memorandum we identified 2 significant audit risks. The first is the presumed risk in terms of management override of controls, which is a risk on every single audit, reflecting the fact that management could, if they so wish, try to influence the reported position in the accounts. We've completed our work on that risk, which mainly relates to work on journal entries in the accounts and estimates. And pleased to say there's nothing coming out of that work which impacts on the accounts, so no audit findings of that, which is a good position to be in. And then over the page is the risk on the valuation of the pension fund liability. Again, we've done the work on the figures in the accounts as they stand and we're happy with those figures. It's just receiving those assurances from the pension fund auditor to sign off that, but there's no findings other than that on the work we've done on the pension liability. The last sort of page in section 4 is more around qualitative issues. I suppose I just want to spend a little bit of time on this, just to reflect the fact that the deadlines were pulled forward this year for authorities producing their accounts to 31st of May. TFM were one of the few bodies that actually met that deadline and provided us a really good set of draft accounts, comprehensive working papers that support those. So just wanted to place on record our thanks to Paul and Paul's team, because I think it's easy to underestimate the hard work that goes into producing a set of accounts like this, especially when you get such a clean audit report. So, yeah, our thanks to Paul and his team for helping us through that process. We also touched there on our wider responsibilities in terms of objections and questions to the accounts. We didn't receive any objections to the accounts or any questions from members of the public. So there's no issues we need to bring to your attention in that respect. Section 5 and 6 reflect that good quality accounts. There were no control recommendations arising from our audit and only a small number of disclosure changes to the statement of accounts. So again, this is a really good, clean audit report. It's probably one of the cleanest you'll see. Section 7 is our work on value for money. Since we drafted this report, we have completed pretty much all of our work now on value for money. We'll report the findings in our auditor's annual report, which comes to the December committee. But in terms of the risk of significant weakness that we've identified on page 20 of our report around financial sustainability, there's findings coming out of that. That was just reflecting, as you discussed earlier, really the operational changes and the need to reduce the cost base. So us making sure you've got arrangements in place to respond to those operational changes. So as I say, you'll get some detailed reporting on that at the next meeting of the Audit and Governance Committee. Other than that, I didn't really have anything in particular to bring to your attention, but happy to take any questions on the report.
Daniel, thank you. Over to members. Joanne, go ahead.
Thank you for that. I am a new-ish member of this committee, so forgive me if I ask questions that you've already answered in previous meetings. The pensions issue and getting the information, what can we do going forward, to make sure that we don't have to wait months and months and months for this information?
I think in terms of what can TFN do, probably the answer is not much. It's something that's been looked at a national level in terms of delays across local audit. Well, going back to your own council audits, I'm sure you've seen similar issues with delays in audits. One of the issues that they have is around the sort of sequencing of audits. So there's a finite number of people who work in local audit. We work on NHS audits up until the end of June at the moment. So Paul's produced accounts at the end of May, but we can't start work on those until the end of June. The pension fund's in a similar position, so they have to produce their accounts by the end of May. We can't start work on those till the end of June. And actually, there's questions around, is it right that the pension fund accounts are linked with their administering authority? Should that audit be done separately to a different time frame to make sure that it can be completed in advance? As much as we can do, we are the auditor of Greater Manchester Pension Fund. I'm not personally, but we are as Mazars. We book that work in early to try and get that done as best as possible. Greater Manchester Pension Fund are the biggest local authority pension scheme. They are probably one of the most complex, so inevitably they take longer to audit, and they're waiting for a lot of information from external agencies to produce their accounts, and then we need to wait for information from those agencies as well to support the audit. So it's something that I wish I had an answer to. I don't at this stage, but it is being looked at by DLUC in particular to try and sort of find a way through the delays in local audit.
Thanks. Ben, did you want to add to that?
Yeah, I just wanted to go on record to thank you, Daniel. I think it's there was a change in the team this year, and I must say it was seamless, which was encouraging. And thank you for your support in relation to the work that we did. I think there's going to be an interesting one next year again, but hopefully we'll continue to do the same thing and develop the relationship further.
Is it just worth just sharing your initial thoughts? I know you've only had about an hour and 10 minutes to think about how to communicate that information to the board when you report up. Just to pick up on Daniel's point.
Yeah. So the way that it works, the sign off of the GMP pension fund is important because it therefore gives assurance that the output that we've used in our accounts is true and fair. That's the essence of it. And until that sign off's been achieved, therefore the ability to rely on the output of the fund that we use to formulate our accounts can't be given. Therefore, the accounts can't be approved until that's in place. Now, historically, it usually comes in quite close to the board meeting. Sometimes it's achieved before, and sometimes it's achieved just afterwards. I think it's a fairly routine matter if it's not dealt with. If we don't receive it before, in that the accounts can't be signed off and filed. We would just need to post a notice on the website to say that there's a delay associated to the receipt of the sign off of the pension fund, and probably seek delegation to the chair to sign the accounts, subject to the only matter being outstanding being the sign off of the pension fund, which I think Julie and I were just talking before. I think that's exactly what we did last year, but I'll have to just refresh my memory as to when the sign off came through.
Yeah, I think, Chair, the sign-off did come through later last year, but the way that we actually couched it in terms of board was that it be approved subject to there not being any issues with the pension fund, so I think we'd have to do a similar thing this year.
And the accounts remaining unchanged, that's the critical piece, isn't it? The accounts are submitted at the board meeting, will remain unchanged, that's the point. Yeah.
Indeed, yeah.
Thank you. Any other comments, questions? Tom?
It's more of a comment. When I read this, how impressed I was with the report. I mean, you're incredibly assured by the work that's gone in. And thank you very much for providing such a clear and very, very positive report, and that reflects all the work that's happened in TFN. And also just to reflect back on the conversation that's just been had about the GM pension fund, that was very helpful for me as a new person to the committee as well. So thank you.
Daniel, thank you. Appreciate that. We are, I believe, down to item number 8, which is the report to the board. Paul.
Yeah, we're just going to find that. Okay, yeah. Sorry, yeah, my apologies. There's always one. I usually carry mute when I'm on the Teams meeting as well. So it's an opportunity just to in one place gather what's happened during the year, with the view that the board would gain assurance over the activities that have been delivered over the year, and therefore that underpins the signing of the accounts. So it's, well, I take it as read. It's a fairly standard output in that the remit hasn't necessarily changed substantially, nor have the activities that the committee have done. But happy to take any questions in relation to it.
Thanks, Paul. Joanne, go ahead.
I did send in a couple of questions, so I don't know if now's a timely moment for someone just to give me an update on those. Oh, of course I can. Yeah, sorry. Okay, so I was wondering, what is the timescale for the procurement of the Internal Audit Service 24 to 27? And also, what involvement do we have?
I mentioned before, Alex mentioned before, I think it's due back on, did it say Wednesday, did you say? Thursday. So the tender's out there, and it's a fairly standard request for internal audit services to establish a provider. There wasn't envisaged to be too much activity in the selection of the advisor, but I think there would be envisaged to be significant involvement in establishing what the work programme would be. So which is one of the reasons why we want to try and get the if it's the existing people who provide an RSM, then that's great. We can get straight into a planning phase now. But if it's somebody new, we want to get them in. So by February, we've got a clear and strong view of what we'll be focusing on, probably certainly for the next year, but with a view also for the next 2 years beyond that as well. And it's not fixed in stone, but we would have a view as to the sort of cyclical arrangements that would be in place. Now we would expect the committee members to have a very active and strong involvement in that process to make sure that they're comfortable that all the risks, all the areas that should be being looked at are being looked at. And there's a clear understanding as to why. I mean, it's quite interesting. We don't necessarily we do a number of audits just to gain assurance that things are working well. A good example is around a lot of the financial stuff that we do. We're not an organisation that can we're grant funded, and so our activities are all linked to funding. If for any reason there was a loss, then there would be a loss of cash or something like that, or a fraud of something of that nature, then we would be significantly affected. So we over-engineer our control environment to make sure that risk is very, very low, if at all, very minimal. And to gain assurance of that environment is still strong is quite an important thing that we do. So we're not going out to identify things that are wrong, we're almost confirming that things are okay. So that's just an example of one area, and then we just focus on other risk areas of risk that are identified either through the assurance framework or emerging risks as they emerge during the year.
Kevin, sorry, go ahead.
I sent a note in around the Appendix 3, and one of the themes there was around the depending on what we call themes, the terms of reference activity, where we're ticking the box that says that we're satisfied that the assurance framework adequately addresses risk and priorities, including governance arrangements in significant partnerships. So my query, it's not a huge issue, whereas I can see that we can tick the box that says, you know, that the assurance framework adequately addresses risks and priorities. I'm not so sure that we can tick the box with hand on heart in terms of whether the assurance framework adequately addresses governance arrangements in significant partnerships, because frankly we're not cited, I don't think, at this committee on those governance arrangements. So the risk register captures adequately, I think, in my view, the risks coming out of those partnerships that we've flagged in our risk register. And so the outcomes, if you like, and the outputs from those partnerships are clearly monitored. But it still begs the question around the governance arrangements. So I suppose my point is, should we just drop that? You know, that last sentence, that last bit of the sentence in future years. It may be one for 23, 24 actually. And/or shouldn't we be having something in our agendas next year or this year that satisfies this committee that actually those governance arrangements are fit for purpose? And there are only two that are flagged, I think, aren't there? It's the Rail North Partnership and the co-sponsor arrangements with the NPR. So it's not a massive issue. It's just, you know, in terms of sort of, I suppose, just from a good governance perspective, it's just something that sort of flagged with me, because if I'm being perfectly honest, I have no idea what the governance arrangements are for those two partnerships. So can I come to a judgment?
I had a very similar sense when I read your comments. So yeah, it's where would you look to get that assurance, and that's the challenge. You did respond to that, didn't you? Probably. Yeah. Daniel, somebody did.
I did respond to that, and in some we can do one or two things, I think, with it. Paul, feel free to come in on this, but one of the things, such as the deep dive that we had today on rail reform, can give us that information, and in the future we could run specific deep dives on those areas if we think it would be sort of beneficial and effective for the governance arrangements. So that could be scheduled into the deep dive plan for 2023 to 2024. 2024 to 2025, the next one, the next set. Or we can have a look at, like you say, have a look at the comment that's in and make a decision on whether it's required to be there in the future. Paul, have you got anything to add?
Yeah, and Kevin, as you said, there's a number of ways you can do it. You could get rid of the line and say it goes away, or alternatively we can try and do something about it. I think we felt that it's quite interesting as the TFN as an organisation has changed quite a bit in the last few years. You know, with the transfer of MPR to the department, moving from a co-cliented arrangement to a co-sponsorship arrangement. So I think, and the committee itself in terms of members changing. So I think Julie and I were just talking about before before the meeting started, and we felt that there is possibly a space to better explain the governance environment. So to fill the void with a better explanation, and it's about just taking a step back and just saying, right, well, how are we set up? What do we do? And does that give you better information to be able to make the assessment? I think that's probably the best way to go. And if for any reason it's not considered to be an area that then you would think that falls within your remit, then that's fine. We could then consider removing it. But I think first and foremost, let's try and advise and inform and get better information at this stage. So we'd come back with probably there's two new members. The two new independent members would join us. They would get approved at board on the 27th, so they would be in place for the next meeting. So we felt it was probably an opportune time, is it the February meeting, to do that.
Yeah, I mean, it's still surely a relevant question to ask. It's whether it's a question for here, isn't it? That's the rather than just lose it.
Yeah, I think I was probably being a bit flippant when I was saying just lose it off the matrix. But I was struck earlier as well by your sort of reference to the busy sort of landscape in terms of the various partnerships across the TFN geography. So maybe if we are going to have a think about how do we look at this as a committee, it might be useful just to have a think about, well, where would we add value in doing that? You know, rather than just doing it because it says we've got to do it. It might be, if we come at it from that perspective of where this committee might add value in terms of putting any recommendations to board, then that might just help us think through. Because I was just thinking, as the rail reform programme progresses, the likelihood is there'll be changes to some of those partnership arrangements going forward. But are we stopping doing some things, or do we just end up with a spaghetti-like framework across the whole of the north of England? Because we're not good, are we, in the public sector of saying, right, we need to stand this down now. So, and create capacity by, for the future by losing some of the redundant machinery that we've got still in the system. So I don't know, Paul, whether that might be something where we could add some value if we are going to have a look at this and put it under the microscope.
Thanks, Kevin. You've currently got the prize for the most thought-provoking challenge of the day, so we'll see if that can last until. John, go ahead. Go on.
I was just going to say we have done previous work a couple of years ago in terms of the governance arrangements and partnerships. So, but things have continued to move on. So I guess thinking about the committee's role and also the assurances you receive, it may be something that you think about for future work of whether you have a piece of work on those arrangements. And we have done those previous, not necessarily in the last year, and things will certainly for the MPR programme will have moved on. We mapped all the structures, how it all interrelated, the decision making and so forth. So that's just something to think about, how you as a committee get assurance in terms of that.
Yeah, because we could end up placing reliance on the work that it might not even be yourselves, it might be some work that somebody else has done, but as long as we know about it, it's part of being informed. Did you have something else, Joanna? Sorry, go ahead.
Yes, just a couple of quick questions. Regarding the internal audit programme, there's 5 audits stated, 3 have been completed, 2 are advisory. Perhaps you could just explain a little bit more about that. And I'm a bit concerned about the equality and diversity audit only coming back with their reasonable assurance.
Apologies. So in terms of the completion of these reviews, they were last year's audits. So you've got payroll is substantial. In terms of quality and diversity, again, the reasonables are positive. They're not negative opinions. And the main reason in terms of equality and diversity is whilst an assessment and a self-assessment had been completed, there was further, it needed a refresh in terms of the self-assessment. More than happy in terms of paper, because you can have a look at the full detail as well, because those reports do come through, so you've got an opportunity to have a look at them. And sorry, what was your second point?
The use of the word advisory, I've not seen that before in an audit plan.
Okay, no, really good question. So in our audit plan that we deliver for TFN, we don't give an overall head of internal audit opinion, so you've got an opportunity to have supportive pieces of work. So risk maturity is a good example, obviously, with new individuals that came into post, to have a look at the new framework, the revisions that were made. And GDPR is an area clearly because of the nature of it, we can't guarantee that you will have any particular breaches. So advisory doesn't give you an overall opinion on that piece of work. It does give you actions, though. So our actions will still have categorisation that are taken forward, and we still follow up all of the actions that are included in the advisory reviews. So it gives a balance. Advisory is more supportive when you're going on the next steps, or GDPR, which is quite specific.
So then those two audits have been done. It's just that you can't tick it in the box to say that they've been done. Is that right?
So I think it might just be the table. They're completed, but you can't have a tick against them because the assurance of, because you don't have an opinion. That's what it is.
I interpreted that as they hadn't been done. And I think you need to make that clearer in the report, because I thought, well, it's very odd to get an audit timetable where there's no tick of any level of assurance. Does that mean the audit's not been done? I think perhaps you just need to add a footnote to it, to this report.
Or a column that is called advisory, maybe.
Yes,
that's
with a tick in it.
Grant, thank you, Joanna. And again, thank you, Rex. Hans, did you have some points?
Just a very brief one. It's more to the internal audit there, is that we've made sort of a decision that we can accept and sign them off subject to the pension side of things. We'll be sending that to the main board to say we've looked into it and this is our recommendation, is that they are safe to sign subject to the pension issue being sorted, rather than going through the full debate again, because we're here to do the work for them. So we've done the work, and our recommendation is what it is. So,
and that's exactly the point. Is on the assumption that the audit of the fund is completed and it gives what is expected, then there would be no changes to anything. And I think that's the basic premise we go forward, is that if the accounts that are in this pack, the accounts that have been submitted to board remain unchanged, then they would be subject to the proposal that would be approved under the delegation granted on the 27th. So it's a reasonable assumption to go forward with, because I don't think anybody expects the. I always say that if the audit of the pension fund comes back and raises concerns with regard to the output, there'll be far bigger organisations than ourselves panicking. One being where we are today. But no one's expecting there to be a problem with. It's more a case of this needs to go through due process and due diligence.
Grant, thanks. Hans, are you okay down there, Tom? You right? Okay, super. Thank you very much. So you've got 30 minutes for year-end statutory accounts. If that might be too much.
I don't know. I'm start taking through some interesting areas. Right, let's hop down to that. I mean, so the board, the committee have seen the draft accounts last time we met, and the what's included in the pack here is the final version, but it also contains comments, because I think it's important not for me just to say here are all the changes. I think we've captured a set of live accounts that have got all the areas that have been modified in there, just so you get assurance that actually there are relatively minor things that have been done and have been demonstrated as being done. I suppose really Daniel mentioned in his report on the back section that there were some minor changes, whether it be typos, an occasional typo that have been picked up, which, to be quite frank, I think is encouraging. I mean, it would be nice not to have any of those, but I think it shows that we are a bit real, and that an occasional thing might slip through. The main substantive change was under discussions with Mazars, they felt that we needed to disclose the exit packages of all employees. I think we'd had a discussion the previous year and felt it was needed to disclose them just of the senior employees, but it was extended this year. I think it probably, on reflection, it might not have been right last year, but anyway, by the fact that we've disclosed the prior year and the current year. We actually pick up from last year as well. And again, it's the principle of being very open and very transparent. And had we have done it last year, there would have been no redundancies in the previous year anyway. So it's fine. So it's recognising the fact there's the accounts, the difference between the accounts that you've got in the pack and the ones that are going to go to the board. There will be a clean version go to the board, and they'll be dated on the 27th of September. I think, based on the discussion we've just had, they're unlikely to be signed on the 27th of September. It will be signed sometime after that. But nothing more to add, really. But also, I think, Joanna, did you say you had a couple of questions on the accounts?
No, I think as we've gone through things, my questions have been answered, so it's fine. Thank you.
Okay, in terms of statutory accounts, any questions from members? Okay. Grand. Well, I feel like I've let you down just as much as when we overrun by having 27 minutes spare. It seems like we've done somebody a disjustice. We could pick on David again to talk about rail strategy, maybe. I don't know if anybody's got any other business we could include at this point. I'll just offer that up to the. Excellent. So we have the board meeting on the 27th of September. That I'll be attending on behalf of committee, and we have our next scheduled committee meeting, which I have down as the 15th of December. I need to make sure that's actually in my calendar. Feels like a shopping day to me, but we'll
I think that will be, it won't be in person, I think is the plan, isn't it? Oh, remotely.
Right.
15th of December, it's very close to Christmas,
isn't it? Isn't it? Gary obviously chose it for a reason. Splendid. Well, in that case, again, thank you for your attendance and your contributions, and we'll call the meeting to a close. Thank you very much.